What's going on, everyone? My name is Jeff. So my apologies, everyone. I did want to make this video a little bit sooner, but I've just been busy and have not had time. This first opportunity I've really had to sit down and make a video. And ACB got some really big news on Tuesday. Guys, I just want to say this right up front. I think that this is being very underestimated, okay? In my opinion, when I'm buying stocks, whenever I'm trading stocks, the numbers that they bring to an earnings report, I think that is second to none, probably the most important thing about a stock. Of course, you do have to see a vision, you do have to see a future. For example, like buying Disney now before the streaming package is released. That is where the true spirit of investing comes from. So you're buying a stock while you feel it is undervalued and you're looking to the future thinking, how can this company gain value? Same exact concept here. Aurora got some big news. Around Monday, Aurora was trading at the $6.10 level, not seeing a heck of a lot of volume. And then Tuesday at open, it shot up to $7.19. It was up all around 12 to 13%. Then it's traded itself back down since that time. Did not hold those levels very long. So I want to talk about why that happened, guys. And again, I want to hold call options going into their next earnings report, because if you notice, look around, none of the other MJ companies are seeing any type of this kind of activity, especially right before an earnings report. I think Aurora is the only one that I've seen come to the table with an upgraded revenue guidance, you know, a month, maybe a month and a half out from a quarterly earnings report. So really excited about that. I know Aurora has the people in charge. They have the kind of company attitude where they're obviously putting customers and employees first, but they are very conscientious of their investors and try to take good care of them as well. So you all know what to do. Make sure to drop a thumbs up on this video. I appreciate all the support, and make sure to subscribe to the channel if you have not done so already. So shares of ACB rallied as much as 14%, helped to pull the entire cannabis sector higher on Tuesday, with the recovery in broader markets following a rout on global trading scares on Monday. So on a preliminary basis, ACB expects their fiscal quarter 4 revenues of $100 to $107 million, and that is up $19.1 million from a year ago. Their fiscal revenues should be around $249 million to $256 million. Like I said at the start of the video, I think Wall Street is really underestimating this type of news, is that they're actually trying to scale up the expectation for revenue. And of course, the stock did see a 10 to 14% jolt, but then it was just traded back off. And unfortunately, barring any real news, I think ACB will continue to trade flat and it will continue selling off before the earnings report. But when they do report earnings, guys, like I mentioned, I do want to be holding some call options, and we're going to talk about that just in a minute. I'm also going to tell you my strategy of buying calls as we get closer and closer to their earnings report. And then of course, cannabis production available for the sale of this upcoming quarter will be at the upper range of 25 to 30,000 kilograms. And then it also goes on to say that final results will be released before September 15th. And then ACB, their earnings date was actually set for September 24th, 2019. Now just bear in mind, this date might change a little bit. It might be a few days sooner, and it might be a few days later, okay? We're gonna have to wait until that week kind of gets here, and then ACB usually announces their earnings date on that anticipated week. But you can kind of aim for September 24th. We have a little more than a month away before ACB reports earnings. And so guys, I'm going to tell you a little bit about my forward strategy, how I plan to trade this going into the next earnings report. Now, any of you all that trade in the MJ sector, you all know these stocks have such a hard time holding their levels, okay? The traditional markets can be booming, hitting all-time highs, and the MJ stocks are trading off. Because the consensual feeling, I think the feeling all Wall Street analysts have, is that this is a very good place to invest, but these companies are still very fundamentally overvalued, right? The ACB, being a $6 to $8 billion company, should be cranking out a lot more than maybe $75 to $80 million of revenue on a quarterly earnings report. So I get all that. These companies are fundamentally overvalued. That's why they continue to sell off. My long-term investment strategy pretty much stays the same. When I start seeing the stock price get lowered and lower and lower, of course I try to add shares on any big opportunity. But now Aphria just taught us a very valuable lesson about how you can trade these stocks come earnings time. Now, Aphria came to their earnings report, guys. They had a fantastic earnings report, and the stock ran over 40%. Now what's happening? It's starting to trade itself back off again. So on the 1st of August, that's when Aphria was trading around $5.13, had their blowout earnings report, and it traded itself all the way up to $7.33, netting almost a 40% gain. And so if you look at this from a 3-month chart, you could see buying call options the day before the earnings report would have been the best strategy, because it really did not get higher, did not trade up higher than it was trading at back in early June. It just seen a really sharp deceleration going into earnings. Now, I don't know if ACB is going to get a similar chart to that, if it's going to trade down really sharp right before earnings, because like I said, they just come out and raised revenue guidance. And I guess it's also fair if I say this: I do not know if they're going to beat and raise guidance on the next earnings report. I just have a pretty strong feeling they do. That's the thing about trading. If you want to play this safe, get long-term calls or get long-term puts, okay? Give yourself time for those numbers to be met, okay? Anytime I feel a little bit uncertain about the amount of time it's going to take for a stock to reach a certain price, I try to venture out 3 to 6 months with calls or puts, depending on which direction I think a stock is going to go. So you might see it trade up, but my gut tells me between now and September 24th, ACB is probably going to go sideways. You might see it tick up on some news here and there, but overall, I'm guessing it'll be trading between $5.50 and $6 right before earnings. And so that is why I'm going to keep my eye on call options, okay? Now, I will probably get a different expiration date than this. Really depends on the exact earnings date. But just keep in mind, weekly options are usually a lot more affordable than a few months out. So if we're all kind of anticipating the ACB earnings report to have a really good beat on revenue and perhaps another raise in guidance, I could see the stock going up maybe 20-30% possibly. But if we are to look at this now in forward observance of the September earnings call, some of these options are very reasonably priced already. Even here, trading itself back up to $6.94. One set of calls for the 27th of September is $94 right now. They get a lot cheaper as these calls go up. Now, if you come down here and look at some of these that are in the money, as you can see, those $3 strikes, guys, they cost about $370. However, we might be well under that $6.70 level. That's why I just say, hey, let's wait till the week of the earnings report, then we can really hunker down and shop call options. Now, right here, guys, in the $7.50 and $8 level, this is where I really start becoming interested. Like I said, ACB has the ability to beat on earnings, and really, that is not what's important. What's important is that they have strong forward guidance. If they can have strong forward guidance, I do not see this stock having any problem trading itself back to $7.50, possibly $8, and maybe even higher. Those options run between $30 and $23. Even if you wanted to aim a little higher, if you think the stock is going to trade itself all the way back up to $8.68, those are 18 cents per contract. So very affordable, and I'm going to be keeping an eye on this as we get closer to the earnings report. And of course, for those of you that don't play options, you know, we had this big dip back at the end of December, start of January, and we got almost a 100% return going into the month of March, where ACB had itself traded back up almost up to $10. It's been pretty much all downhill since, even despite their last earnings report, which was very positive. These stocks are just viewed as fundamentally overvalued. So look to buy on any significant dips. If we do get under $6 a share, I think that's a great place to cost average down again. And for some of us who were buying ACB all along, you might actually want to wait a little longer. But for my long-term position, guys, I would have to see ACB trade down to $5.50 before I would be interested in cost averaging down some more. So just look at your position, look at what costs you own, and say maybe aim for 10 to 15% loss, maybe 20% loss before you buy some more. That is my suggestion. because this is not a race. This is a long distance run, but we are seeing all of the signs of a very, very future successful company. And it really starts with this news we just got. Anytime a company comes out in between quarters and says they're raising revenue guidance, guys, that is an outstanding sign. But anyway, that's all I got for the video, guys. Make sure to go down to the comment section and share your thoughts and opinions with me. I would really like to hear all that. Thank you as always for watching the video, and have an awesome day.